Hey guys, hope you're having a great day. Your old buddy Tim back with another video for you. And in this video, we're going to address the 8,000-pound gorilla in the room. And that is this. How are these interest rates that the Fed keeps pushing upwards affecting your ability to buy a home? And, you know, we hear a lot about this on the news. Interest rates are going up. Inflation is going crazy. The mortgage rates, especially, are what concern us, are going up considerably, seeming like every month. So what does all that mean to you and your ability to get a loan and afford to buy a house? So that's what we're going to talk a little bit about in this video. But before we get started, if you don't mind, if you like what we do here on the channel, click that little subscribe button, wherever it may be. Click the bell notification icon, give us a thumbs up. That way you never miss another video. And if you are thinking about relocating here to North Alabama, or if you're an investor looking to invest in one of the hottest investment markets in the country, we would be more than happy to help you. We've got REVOLVED Realty 94 agents, I think now, ready to go to work for you and work with folks all the time that we meet through this YouTube channel, relocating here or looking to invest, what have you. And if you're already here and you would like the assistance of the fastest growing little independent brokerage in town, that is REVOLVED Realty. Again, I think we're 94 agents now, hoping to hit 100 agents by the end of this month. So anyway, hey, first off, let me address this. It is a Saturday here. I am on my way to the gym. This is my old man gym outfit, so that's why I am not wearing my my work clothes. But anyway, let's talk a little bit in this video about ways that you are still able to afford a home in a market where things are admittedly a little crazy right now. So, as you know, interest rates have done this. Interest rates, I think, are floating somewhere around 7 now, and that has greatly affect the normal traditional buyer's ability to buy a home. It's not that you cannot get approved for loans now. It's simply that with a higher interest rate, your monthly payment is going to be more, which means you are going to be able to afford less house than you could have, let's say, 6 months ago if you had decided to purchase then. So here's a couple of things, just thoughts, and these are my thoughts. You can take them for what they're worth because they are free. Mortgage companies, right now there are hundreds and hundreds of mortgage people in rooms thinking how they can go around this rate hike. And you can't really go around it, but there are things that can be done to lower that interest rate, maybe even for a couple of years, and therefore help the buyer actually purchase a home. You know, mortgage companies, even with all the bad press they get and things that have gone wonky over the last 10, 15, 20 years, mortgage companies are not in the business to lose money. Mortgage companies are in the business of loaning money to purchase real estate, and they make a lot of money back when it comes to the interest and that sort of thing. So, you know, mortgage companies are not going to sit idly by and watch the Fed raise interest rates and greatly reduce their business. They're just not going to do it. That is not their business. So they are thinking of all kinds of ways that they can help the consumer, the buyer, go ahead and purchase a home. You know, we're seeing things like, what is it, the 2-1 program now, where the first 2 years of the mortgage, the payments are actually supplemented by the seller, who deposits money in an escrow account at closing, and that money goes to pay a portion of the buyer's payment for the first 2 years. We're seeing a lot of mortgage companies come out with assumable loans. These are, or they're making loans assumable. If you are a buyer and you're looking at a home, it would be worth your time to find out who is the current mortgage company on that home, what the interest rate is, and is that rate or that loan assumable. You know, back years ago when I bought my first house, assumable mortgages were all the rage, as were the ARMs, adjustable rate mortgages, which are back. And gosh, I've said this before. I think when I bought my first house in 1988, mortgage rates were somewhere around 14%. I got an adjustable rate, and I think over time that went up to like 16, 17%. But now you can look at is the loan that's currently on the house, is it assumable? Is it a rate that you would assume? Now, of course, you still got to qualify for the loan, just as you would anyway. But if that loan, let's say they've got a 3.5% interest rate, and if you can assume that loan, you would assume their interest rate or something close to it. ARV, or the ARMs, the adjustable rate mortgages, those are back with a frenzy. An adjustable rate works like this. You can get, let's say, I think it's a 3.5. For the first 2 or 3 years of the loan, the interest rate is at this level. And then coming up in years 4 and 5, it can go up a little and go up a little more. Now, folks are afraid of adjustable rate mortgages because they're afraid of how high they can adjust. Well, contractually, they can only go up so much. There are limits put into place when you do the loan. And so you are not left completely open-ended. Your loan is not going to go from 5.25 to 28 and above. It's just not going to happen. You're going to agree up front how much that adjustable rate can adjust upwards or downwards. You never know. So you've got the adjustable rate mortgages, you've got the assumables, you've got the companies putting out things like the 2-1s, and some of these, I mean, they apply to VA loans as well. It's not just conventional. So mortgage companies are racking their brains to come up with ways that they will help supplement your payment or help get the points down or what have you. Now, a lot of that is the cost of that's going to be footed by the seller. You know, the sellers in this market are going to have to offer money for closing, or they're going to offer money to buy down points, what have you. But sellers are realizing this. You know, even though here in North Alabama, we're still technically in a seller's market, sellers realize that they're probably going to have to kick in some money to help buy down points or pay closing costs or contribute to these 2-1 mortgages on behalf of the buyer. And again, sellers are realizing in this market, if you want to sell a home quickly at a good price, you're going to have to offer those kind of incentives. So mortgage companies are working with sellers, they're working with buyers, and they're trying to come up with ways to go ahead and get you in a house and get that interest rate down and that monthly payment down. Now, the other parties that we are seeing do things to help get you in a home are the home builders here. And, you know, I've talked about this before. The last year or so, some of the builders, not all, but some of them were of the mindset that they really didn't need these good old realtors bringing them clients, because all they had to do was stake the ground, start building, and clients would flock to them. And in some cases, that's completely true. But builders were completely cutting out agent commissions. They were just not being nice to the folks that typically bring them clients. Well, that is changing now with the market slowdown. Builders are going, oh shit, we need those pesky realtors. We need to pay their commission because they actually earn their money. So the other thing they're doing is they're incentivizing us agents to bring them clients. They're giving us bonuses and things like that. It's really nice. But they are also working with clients, offering things like closing cost assistance. There's a builder here. Got an email the other day. They are offering $20,000 in closing cost assistance. That's $20,000 that you can take and, you know, apply it toward your loan fees, apply it toward your closing costs. You can also take it and buy down points. And really quickly, if you don't know what that means, let's say you are getting a $350,000 home, and let's say you're borrowing $300,000. Well, you can buy down a point by paying 1% of the loan amount, and that will lower your payment anywhere from 1/4 to 1/2 on the interest rate. So if it's a $300,000 loan and the seller is willing to offer you $6,000 in closing costs, you can take that $6,000, apply it toward that $300,000 and buy down 2 points, which could get your interest rate down to half, maybe even a little more. So sellers know that they're having to contribute these things, but builders are really offering incentives now. Like I said, cash that you can do. You know, they're doing things like upgraded carpet, upgrade finishes, privacy fences that they were charging for. upgraded allowances, the sellers or the builders are really coming around to the notion and the realization that they have to offer something a little extra to get buyers in the door. And so if you are in the market for new construction and you find a builder that's willing to put down, $10, $15, $20,000 toward your cost or buying down your points, that could greatly reduce your monthly payment as well. So there are a lot of different things you can do. The Fed, while they control the interest rates, they do not control the creativity of those of us in the business. So again, talk to a realtor like myself, talk to a lender, talk to the builders if you're going to do building. Find out the best ways that some of your costs can be paid to get your interest rate down, get your monthly payment down, and you'll still find it's a good time to buy a home. Because honestly, this time a year ago or even 6 months ago, the market here was so competitive that, we were getting 20, 30 offers on homes and going $50,000, $60,000, $70,000, $100,000 over ask. So it was very frustrating for traditional buyers who might have 3% to put down and then had to get a loan because cash buyers were wiping them off the slate. We had clients here at Revolved who literally put in, 15, 20 offers and got beat out every time. Well, the good news is, guys, that's changed. So the good news is there's more housing available. Sellers are willing to dicker now, and you're not in competition with a lot of cash buyers. The downside, interest rates are higher. The plus side of that, you've got builders, mortgage companies, realtors. You've got folks who are coming up with all kinds of creative ways to get that interest rate down and get you in a house. So, all right. So don't get discouraged. Don't get upset. Don't think that you can't buy a house. Money costs more now. That's just the bottom line. You may have to adjust the amount of house you buy down a little bit. And keep in mind, even if you have to do a mortgage with a high interest rate, you can always refinance in the future when interest rates are going to come back down. And are they going to come back down? I believe they will. I don't believe we're going to see 2, 3, 4% anymore, but I think they're probably going to go up, maybe back down, settle in somewhere. I would think in the high 5s or 6s, but my crystal ball is a little blurry. Don't take what I say as gospel. That's just my own opinion based on things that I hear and people that I talk to. So, all right, guys, there you go. You can still buy the house. You may have to adjust some things, but it's still possible for you to buy a home. And honestly, historically, 6 and 7% rates are not that high. They've been a lot higher in the past, but again, I think they're going to go back down. Things will settle down over the next year or so, and it will get to a point again where it's attractive, but in the meantime, you do have options. That's the point of this video. You do have options, right? All right, guys, I hope that was helpful. Again, if you like what we do here, click that subscribe button, give us a thumbs up. And if you are interested in moving to North Alabama or investing here, or if you're already here and you would like the assistance, again, of the fastest growing little independent brokerage in town, that is Revolved Realty, give us a call. My contact information is below. All right, guys, that's it. Get out here, make it a great day. I will see you soon.